Well, China is Canada's second largest economic partner, with two-way trade in 2024 worth around $85 million. Now, data for the whole of 2025 isn't out yet, but the first half of last year saw bilateral trade grow, but it slowed significantly in the second quarter, from 7% growth in the first 3 months of the year to just 2%. And that's mainly due to tariffs. Beijing announced a 100% levy on Canadian canola oil in March, followed by almost 76% on canola seed in August, as well as a 25% duty on pork and seafood. Well, those were all in response to Canada's 100% tariffs on Chinese EVs and 25% tax on Chinese steel and aluminium. Now, there have been calls on both sides for a reset. In October, China's ambassador to Canada, Wang Di, said that if Canada removes the unilateral unjustified tariffs on Chinese products, China will reciprocate. Well, that prompted calls for the Canadian government to respond. At least 2 provincial premiers said Ottawa should drop tariffs on Chinese EVs, with one urging Mark Carney to seize the opportunity. Canola farmers, who rely heavily on exports to China, also want the Prime Minister to get the tariff issue fixed. Well, Graham Shantz is the president of the Canada-China Business Council.
I think in the first instance, it reestablishes the habit of meeting between the Canadian leader and Chinese leadership, which is very important. Secondly, I think they'll have to address some of the irritants, trade and goods irritants that are ongoing. And finally, I think it's really important that at this moment, in terms of the global economic system, that we have a Prime Minister in Canada very capable of talking about the flows of capital, the flows of goods, and the overall global economic framework. And China, as the second largest economy in the world, has a critical role to play in the decade ahead in terms of managing the global economic system.
This visit comes as U.S. tariffs and this America First policy is hitting Canadian exporters and pushing Ottawa to diversify. How much of the trip is really about managing the pressure from the U.S.?
The domestic economy in Canada, it's true, is in a bit of a soft patch, but it's still growing. We're not in recession. At the same time, you're correct. The Prime Minister has identified the importance of doubling non-U.S. exports as a percentage of total Canadian exports by 2035. China clearly plays a critical role to that objective, and I'm delighted, and our membership of the 300 members of the Canada-China Business Council are delighted to see that emphasis.
China is Canada's second largest single country trading partner in 2024. Which industries do you see the next wave of growth coming from?
I think we've seen growth with Canada having increased its ability to export crude oil and liquefied natural gas in 2025. So I expect growth in energy exports to continue in 2026. And hopefully in the decade ahead, we can double that yet again. Secondly, I think there's a lot of potential in green technology and green energy. Canada has capacity, China has capacity, and I think there's a lot of space there for growth in the two-way relationship. Finally, I think that we can do a lot in financial services. Canada has a world-leading capacity, banking, insurance, real asset management, pension fund management. So I think there's space there for deepened cooperation.
From the business community's perspective, what do Canadian companies most need from both governments?
I think from both and from a global context, the importance of a growth framework globally, which is essential for the ability for businesses to invest with an expectation of returns over a decade or decades, indeed, for big projects. So for the Canada-China relationship, putting in place a framework that gives some stability in access to markets is critical, and also in terms of the investment framework in both countries.
You speak regularly with members of the Business Council. What's the most important message that you are hearing from them ahead of this visit?
No, I think from a perspective of Canadian exporters, but Canadian investors, and also the people-to-people ties that we have reflected in the membership of the Canada-China Business Council. This is education and other areas, tourism. But I would say that I think it's critical for China at this point in time to continue to play a role that it played in the great financial crisis, for example, in 2008, 2009, as a stable source of final demand for the global economy. I think for our companies and our members, the China continuing to play that role is critical. For example, the China Import exhibition that's held every year in Shanghai is a critical signal.